We are 9 days away from our annual Cup for a Cure soccer tournament. That's right. It is Saturday, September the 14th. That's less than a week and a half away. Our annual Cup for a Cure soccer tournament for ALS Canada has been going on since 2013 in Mississauga. Prior to that, it was in Guelph, started in about 2008. But this is an awesome tournament, soccer tournament. If you haven't heard of it, 7v7 adult. You're guaranteed 3 games, some maybe 4 games, depending on how many teams we get, etc. And it's just a one-day event. Some awesome soccer to be played, and it's a lot of fun. And the weather's supposed to hold up. No sign of rain in the forecast, so it's going to be a great day with some great soccer, as I mentioned. And there's so much to do there. We've got a barbecue. So one of our sponsors from day one, Longos, is going to be on board again this year, and they're going to provide everybody with some delicious Longos barbecue stuff. We have a raffle. I can't forget about the raffle prizes. I heard there's going to be a large screen TV up for grabs. So much, like I said, to do, and it's for a great cause. I mean, that's what it's all about. It's a charity event. It's not a money tournament or anything like that. It's all for fun. All skill levels are welcome. Okay, so even if you're, not so great at playing soccer, come on out. You can join a team or you can volunteer. Right? We have so many things that we can do as a volunteer. We have set up. We need people to sell raffle tickets. We need field conveners, people to, do a whole bunch of stuff on that day. So we can certainly use as many hands on deck as we can get. And just you can donate. Obviously, you can go to our website, alscupforacure.ca. That's ALSCUP FORACURE.ca. You can donate there. You can sign up your team there. It's only $3.95 to sign up a team. And like I said, you're guaranteed 3 games. Plus, we've got some amazing trophies for the winners. It's usually a round robin, and then we go into the elimination rounds. A lot of fun, like I said, and for a great cause as well. If you're not familiar with ALS, it stands for amyotrophic lateral sclerosis, pardon me. That is a neuromuscular disease. It's a fatal neuromuscular disease, which essentially traps you in your own body. It shuts down one muscle at a time, one organ at a time, until you can't even breathe on your own. And it's just a horrible, horrible way to die. And that's the outcome anyways, because there's no cure for this thing. So find it in your heart and go to our website, make a donation, even if you can't come out on Saturday, September the 14th. If you can't come out, even better. If you don't want to play or can't play, that's fine. Just come on out, be a volunteer, be a spectator. Just enjoy the soccer. It's going to be a great day. Enjoy some Longos barbecue there. Buy a raffle ticket. They're only $2, so buy a couple of raffle tickets, maybe 5, maybe 10, and enjoy the day. It's going to be an awesome day. Saturday, September 14th in Mississauga at Iceland Fields in Mississauga. So, I can go on and on about this. I can talk about this all day. If you want to have more information, again, go to our website, ALSCUPFORACURE, alscupforacure.ca, or reach out to me. You can DM me, you can make a comment here, etc. If you'd like more information, by all means, I'm happy to help. And like I said, we've got almost a full schedule already. I think there's like 9 or teams already registered. So if we can get 12 teams registered, that would be fantastic. We're going to have a great tournament on that day. So, as I said, I can talk about this all day, but I'm sure you tuned in to hear what I have to say about the interest rates and the real estate stats, etc., all the boring stuff, right? So let's move on. So yesterday, as I'm sure you've heard by now, because every real estate agent and mortgage broker posted on their social media that the rates have come down again. Okay, so back in June, uh, the rates were cut 0.25%, bringing it down to 4.75 policy rate. And then in July, another 0.25% rate cut, bringing it down to 4.5%. And then now yesterday was the third consecutive rate cut, bringing it down to 4.25% policy rate, which means that the prime rate is at 6.45% because the prime rate is always 2.2% percentage points higher than the policy rate. So you're looking at a prime rate now of 6.45%. So if you're at the bank and they're offering you a prime, say prime minus a half or prime plus a half, whatever they're offering you in terms of mortgage or line of credit, let's take lines of credit, for example. Lines of credit are usually prime plus a half. So at 6.45 prime plus a half equals 6.95. So any HELOC, home equity line of credit, or something like that, that's offering prime plus a half, you're looking at a 6.95 interest rate, which is down from earlier in the year. It was at like 7.7, right? So this is good. It's going in the right direction. This interest rate cut also affects variable mortgages. Okay, so it affects lines of credit. It affects variable mortgages. So those on variable mortgages should see their monthly payments come down. Okay. If you're on a fixed rate mortgage, you won't notice it until it's time to renew. And we've got a ton of mortgages set to renew at the end of this year and then mostly next year. I think it's like 52% or something of all mortgages are set to renew next year. And the good news for those people is that these rate cuts will continue going down. Now, they don't affect fixed mortgage rates. That's the bond yields. However, it's kind of like indirectly related because the banks want to be competitive with their fixed rates. So if the variable rate keeps coming down, I know the fixed rates will be coming down as well. And there was a report out a couple of days ago from the top guy at RBC, which holds the majority of mortgages, saying that there's a interest rate war brewing among the banks because they don't want to lose market share, right? So get ready to see the banks offering huge discounts on their mortgage rates, be it fixed or variable. So those who are coming due in the next, say, 12 to 18 months should get a really good rate to renew. And if you don't, then shop around, right? Because there are going to be deals out there. Again, according to RBC, there's going to be some interest rate wars going on. Some banks are going to be competing against each other. Other lenders are going to be competing against each other. There's something called a monoline lender, which deals only with mortgages, right? So don't only look at the big five banks because the big five banks are only going to offer what they have, right? Like I said, there's monoline lenders that you can look at. All kinds of secondary lenders, credit unions, etc., which can offer you a fabulous deal on mortgages. So it's always great to consult an independent mortgage broker, not just a mortgage agent that works for the bank, but a mortgage broker who deals with several lenders, right? They deal with the banks, they deal with monoline lenders, they deal with secondary lenders, they even deal with private lenders, if you have to go that route. So consult a mortgage broker before you sign on the dotted line to renew your mortgage because you won't be sorry. They're going to offer you some great deals. And if it turns out that the bank's offering you the best deal, hey, then go with it. But it doesn't hurt to let the bank know that, hey, you know what, I want to shop this around, or I got a deal from such and such a place that's offering me better. So you can always negotiate with these banks just because they're offering you, okay, we want to renew you at 4.95. Well, you know what? Tell them, I want you to do better than that because I plan to shop around, or such and such a place offered me 4.5. Can you match that kind of thing, right? So it doesn't hurt to do that, and they will certainly be open to negotiating your renewal rate. So keep that in mind if you're going up for renewal. Okay, so that's a mouthful there. Um, I talked about the interest rate cut yesterday. It affects, like I said, lines of credit. It affects variable rate mortgages as well. And the even better news is that more rate cuts are coming. So if you recall, back in July, when the second interest rate cut happened, I had predicted at least two more cuts for the rest of the year. We already have the one cut, so there's going to be at least one more cut, I believe, between now and the end of the year. We have two more announcements, one in October and one in December. I'm sure, I'm willing to bet that at least one of them is going to be another rate cut, whether it's a 0.25% rate cut or 0.5% rate cut. I'm not sure, but we will see another rate cut. And I say that because listening to the Bank of Canada governor yesterday in his press conference, along with Carolyn Rogers, um, he was very optimistic. And he even admitted that more rate cuts are likely to happen if inflation keeps coming down, if they see what they want to see, et cetera. So for him to admit that tells me that, yes, absolutely, there are going to be more rate cuts coming because Tiff Macklin never admits anything. Earlier in the year, if you had followed his press conferences, he was like tight-lipped and he would never say anything about interest rate cuts or anything like that. So now he's freely admitting that more rate cuts are likely. So that's good news for people in that space, like I said, in the lines of credit or variable rate mortgages. Some are calling for two more rate cuts. So we may even see the policy rate come down to 3.75 by the end of the year. I'm not going to predict that right now, but it should be at least 4%, if not less, by the end of 2024. So keep that in mind. And yeah, so that's something to look forward to. Also, something else that Tiff admitted, which I've been preaching here for the last year and a half since the interest rates started going up, is that the biggest contributor to inflation is shelter costs. And shelter costs are greatly affected by the interest rate, the mortgage interest rate, right? That's like contributes like at least 25% or so to the shelter costs, which adds to the inflation. So, with that being the biggest contributor to inflation upwards, you would think they would realize that by bringing the rates down, it's going to bring inflation down. And they admitted as much yesterday, not in so many words, but they did, point to that and said shelter costs are still the biggest contributor to inflation. And having acknowledged that, I think you're going to see more rate cuts come down. They don't only look at that, they look at the labor as well. So he touched on that, Tiff did, about labor going up to 6.4% unemployment rate. We have another labor announcement or an unemployment rate announcement tomorrow, as a matter of fact. So we're going to see what it is there. It might even creep up even more. And if that's the case, then you're certainly going to see some more rate cuts. Actually, we have two more unemployment announcements before the next rate cut. Before the next interest rate announcement is October 23rd. And we have two unemployment announcements before that, September 6th tomorrow and then October 11th. So it's going to be interesting to see where the unemployment numbers are going to be by that time. And also we have another two inflation announcements. We have one coming up this month, September 17th for August, and then we have one coming up October 15th for the month of September, all before the next interest rate announcement. So I'll keep an eye on that for you. Stay tuned, and I'll let you know what the numbers are by that point, and we'll have a better idea what the interest rate announcement is going to be by the third week of October, for sure. All right. If there are any questions, I'll take them right now. I'd like to keep this interactive, so if you do have questions, by all means, you can post them here, and I'm happy to answer them, because you never know who else watching has the same question, right? If it's a more personal question, by all means, you can DM me, and I can get back to you at that point in time. Or if you're watching on the replay, still post your question here, and I'll definitely get to it as soon as I can. Because like I said, a lot of people out there probably have the same question you do. So there are no silly questions. Don't be shy. Post your questions here. And we're going to move into the stats right now. So the Toronto Real Estate Board, or the Toronto Regional Real Estate Board, released their monthly stats earlier this morning. And as expected, August is a very slow month. I've mentioned this countless times that August is the slowest month of the year when it comes to real estate. And last month was no shocker either. We saw sales activity come down all across the board, except Brampton, for example. This makes me laugh because Brampton always beats its own drum, kind of thing. So in Toronto, we saw sales activity come down 16%. In Mississauga, 3%. In Oakville, it was pretty flat, but in Brampton, it actually went up 0.5%. So I don't know if you can count that as going up, but it's more or less flat. But it's just some crazy stuff going on out there in Brampton. We call it the Wild West. So that's funny to see. But at the same time, supply has come down too. Not as much as sales volume, but in Toronto, for example, supply came down 8% versus a 16% drop in sales volume, meaning that the months of inventory continues to go up. And when that happens, the market is slowing down. So the months of inventory, for example, was 4.75 back in July, and now it's around 5 or just over 5 months of inventory. And that means if no other listings came to market, it would take 5 months to completely sell out. Or another way to look at it is every house that goes on the market has a 1 in 5 chance of selling. That's pretty much it. So that's why a higher month of inventory is not good for sellers. It's great for buyers because they have more options. In Mississauga, the supply fell about 0.5%. So again, more or less flat. It came down slightly, but sales volume came down 3%, as mentioned earlier. So again, the months of inventory there actually stayed pretty much flat. It didn't change very much at all there. In Brampton, as mentioned before, sales volume creeped up a little bit, about 0.5%, but supply was pretty much flat. That means the months of inventory came down slightly. So it went from 4.75 in July to about 4.44%, or say 4.5% in August. In Oakville, things are pretty much flat there. Both supply and demand stayed pretty much flat. But Oakville is a very small sample size, so things didn't change there much at all. Moving on to average home price. In Toronto, we saw prices fall about 5% month over month. In Mississauga, they stayed pretty much flat, so not much change there. In Brampton, they fell 2%, even though sales volume ticked up slightly. The prices came down a little bit, which tells me that sellers are finally, lowering their prices, capitulating to the buyer's demands, because you're going to see a lot of tire kickers in Brampton. You're going to see a lot of lowball offers in Brampton, and that's probably what's happening here. Sellers are finally, coming down slightly in their asking prices. And then in Oakville, prices fell about 3% month over month. So that's that for the stats. Again, if you have any questions, by all means, post them here. Whether you're catching me live or on the replay, and I'm happy to answer it. And just to reiterate, you will see more interest rates between now and the end of, interest rate cuts between now and the end of the year. That should increase consumer confidence in the fall. A lot of people are calling for a rebound of the real estate market. I'm not so sure it's going to rebound to the extent that some people are expecting. I think we're going to continue pretty much in a balanced market. So things are going to be pretty slow between now and the end of the year. They can't be worse than August, hopefully, but I think they're going to be a little bit better. And with continued rate cuts, I think that's when you're going to see people have more confidence to buy stuff, because unaffordability is still an issue, right? Let's face it. Prices haven't come down as much as people were expecting or people were hoping. But at least if the qualification side of it can help people get into the market and they can qualify to purchase a home, then that's what they'll do. As my friend and mortgage guru Vince Gaetano always says, people don't buy homes; they buy monthly payments, right? So as long as they can qualify for that monthly payment, they can purchase a home. And that's probably what you're going to see between now and the end of this year. Maybe even into next year, the rate cuts will continue. So it's going to be interesting to see, but I'll keep you posted one way or another on what happens at that point there. Okay, so if there are no more questions here, I will let you go to enjoy this beautiful afternoon. And don't forget, Saturday, September the 14th, come on out if you're in the area, enjoy the soccer, whether you're playing or not playing or just watching or volunteering, buy a raffle ticket or 2 or 5 or 10, right? And enjoy the day. And follow us. We also have an Instagram account at Cup for a Cure on Instagram. I think we're also on YouTube with that and on Facebook as well. There's a Facebook page. So, ciao, everybody. Have a great afternoon.